First, I would like to give the floor to Mr. Balz as a rapporteur for 4 minutes.
Herzlichen Dank.
Thank you, Mr. President. Good morning, of course. Good morning, Commissioner. With today's vote on the Omnibus II directive, we are beginning the process for better insurance regulation for the European Union. As legislators, we can't just concentrate on banks, though, of course, in the banking sector there was a need for more urgent and determined action. Now, this is going to insurance products are very important, and these are investments that last decades. There's hardly a citizen in Europe that doesn't benefit in some way from some kind of insurance. And I think that with the new framework we achieved two objectives. First of all, better regulation for companies operating in Europe, so that boosts consumer protection, and secondly, we're finding good solutions for the long-term business model of insurance companies, and that's something that customers should benefit from. With Omnibus II and other legislation, we have better legislation that lead to better risk management, and also subject all business to openness and transparency rules. This is very important for the stability of the markets, because everybody will benefit from the harmonization of the markets, whether they're cross-border active now or they wish to do so in the future. For the long term, we want to come nearer to a single market for insurance products. That means that new rules must be applicable to smaller companies in the sector, but they shouldn't overburden them. Now, we, the European Parliament, have managed to protect proportionality. And, of course, the EIOPA will take on very important obligations. There should be a broader spread, and that will lead more competition. And this is also going to help customer care at a regional level. Again, this is to the benefit of consumers. And now we can't allow these markets to be destroyed by an excess of Brussels red tape. And all companies should be able to continue under the Solvency II directive. We also provide long-term guarantees for the insurance markets. Insurance is a long-term product, and investment happens in the long-term way. Quite often, these insurance contracts are applicable for very long times, or on the demise of the owners. And we need to ensure there's decent protection from excessive fluctuations in the markets. We also must allow a period for adaptation to new systems. Sustainable investment in insurance products for retirement should continue. We need to keep interest rates low, but all additional costs should not be paid for by the consumers. This package of long-term guarantees is a critical component of Omnibus II. We in the European Parliament have carried out impact assessment, which has made clear the situation. Now, there's been a lot of delays here, 13 years of negotiations, and I think we've got a good basis. And as I said at the outset, this is going to be beneficial for the European insurance sector and for customers. So it's a good starting point. Thank you.
And just now I would like to give the floor to Commission. Commissioner Borg, you have the floor.
Thank you very much, Mr. President. Good morning, honourable members. In the name of the Commission, I would like to thank the rapporteur, Mr. Burkhardt, Ms. Sharon Bowles, Chair of the Economic Committee, and the shadow rapporteurs, Mr. Peter Skinner, Ms Sylvie Goulard, Mr Ashley Fox and Mr Sven Giegold, the Econ Committee and Parliament as a whole for the work which has been done on Omnibus II. The agreement on Omnibus II that Parliament reached with the Council and the Commission in November of last year, after almost 3 years of negotiations, is a very important step towards the introduction of a modern and risk based solvency regime for the insurance industry in Europe as of 1 January 2016. It updates and completes the Solvency II Directive. The new solvency requirements under Solvency II will be more sophisticated and more risk sensitive than in the past, thus enabling a better coverage of the real risks of any particular insurer. The new requirements move away from a crude one model fits all way of estimating capital requirements to more entity specific requirements. At the same time, unintended consequences for the real economy are avoided because Omnibus II, thanks to the technical advice of the European Insurance and Occupational Pensions Authority (EIOPA) and the insistence of this Parliament, introduces a balanced package of measures that will enable insurers to provide insurance products with long term guarantees. Today's vote also means that Europe will soon have in place an insurance regime that will serve as an example for other regions in the world. Solvency II will also put a greater focus on risks and their management, as well as introducing stricter rules on the disclosure of certain information publicly. Solvency II should thus increase confidence in the insurance market, making it both safer and more competitive. This long awaited and vital reform is now becoming a reality. The Commission is preparing the next stage of the implementation of Solvency II, which will be the adoption of a Commission delegated act containing a large number of detailed implementing rules as laid down in empowerments in the directive. Important principles such as the proportionality principle, which are also very dear to this Parliament, will duly be reflected. The adoption of this delegated act is planned for the summer of this year. At the same time, EIOPA is working hard on a package of implementing technical standards. Everything will be ready for Solvency II application on 1 January 2016. At the request of the European Parliament and Council, the Omnibus II Directive contains 2 new articles, Articles 2AB and 2AC, which amend both the ESMA and the EIOPA regulations. The Commission agrees with the substance of these amendments. However, as highlighted by the Commission during the trialogue discussions, amending Union regulations by the legislative instrument of a Union directive is not in line with the principles of good legislative drafting. In this context, the Commission also notes that the 3 ESA regulations constitute an essential building block of the supervisory structure within the internal market for financial services and thus for the banking union. Due to the fundamental nature of the 3 ESA regulations and for reasons of legal certainty, it is, in the view of the Commission, paramount to preserve the integrity and coherence of these regulations, avoiding subsequent or uncoordinated changes to these rules through sectoral legislation. Thus, while the Commission can accept the substance of these amendments in the context of the final agreement on the Omnibus II proposal, the Commission is of the opinion that it would have been more appropriate to determine these issues in the context of the forthcoming horizontal review of the ESA regulations. That said, I would again like to congratulate Parliament on its instrumental work on this important dossier. Thank you for your attention.
Thank you very much, Commissioner. And just now I give the floor to the speakers on behalf of groups. Madam Maletic is not here. It means next speaker is Mr. Skinner for 2 minutes. Mr. Skinner, you have the floor.
It didn't come in the order that I thought it would, so excuse me for standing up a bit late. I want to say, first of all, thank you very much to the Commissioner for his kind words, and to Mr. Balz for the work that he's done, and the team that we've had to work on Omnibus II. I think it's been fraught with interesting dilemmas, mainly about national and industrial issues, but also largely also about how to protect the consumer and how we've managed to sort of put those things in balance. It's been marked, I believe, by the fact that it's taken a long time for us to get Solvency II to the starting point that it's at. But when I look back on these large number of years in which we embarked on this, I have to say that the most remarkable thing is that it's here, and is so far a success in terms of the parliamentary system at least. The next years will be most difficult, I think, for the future European Parliament about the implementation of this legislation, because quite apart from the technical nature of its internal workings, this law has a very basic and simple truth about it. That is, it was born outside of and conceived outside of the financial crisis. It is the most comprehensive piece of financial services legislation in terms of Solvency II. It therefore deals with a complete picture, a big picture of an industry, and instead of perhaps being forced down the throats of politicians, we've welcomed it and we've nurtured it along. In that respect, I think it's a bold experiment about how the single market at a European level can truly work to the benefit of both the consumers and the companies working within it. There were elements which I think make for a very great success for this report. The one I want to choose to talk about today is the third country recognition, and about how it is also clear that we have not cut our nose off to spite our face in order to face the rest of the world. This has been a great success. The team has worked well, and I'm thanking everybody who has performed and given work towards it. Thank you.
And next speaker is Madame Goulard.
Thank you, Chairman. Bonjour, Monsieur.
Good morning, Commissioner. Well, we've arrived after months and months of work, and of course I'd like to thank Burkhard Balz, the rapporteur. I'd like to thank the Commission, the services and the successive teams from Council who've helped us to bring this forward, complex negotiations. So the idea now is to have a single market as soon as possible for insurance policy. That was launched by Solvency II, but now we've got the extra element of EIOPA that was created. But obviously our major concern has been to make sure that insurers will continue to play their role as long-term financiers of our economy without having to suffer from excessive short-term volatility. And that's a tough balance to create. Mr. Skinner said so himself. The Solvency II rules had foreseen these things before the crisis, of course, and then obviously controls and so on as a result of the crisis have meant that investment is now more complicated. But I think the work that we have done has led to more transparency in terms of the commitment of the insurers and the quality of what they provide. There's also more governance, and that helps EIOPA to play its role as a European authority fully. Having said that, I'd like to draw the Commission's attention to an important point. For legislation like this legislation, we can adopt the text in a vote, but implementation is quite another thing. So we need to have delegated acts to retranscribe certain important elements from the agreement that was concluded on the 13th of November last year. And in that agreement, there's a proportionality principle agreement which places obligations on bodies in accordance with their size and their commitments. And that has to be very carefully reflected in the delegated acts. And we don't know who's going to be here in the next parliamentary term, but I'm sure that colleagues here and at the Commission will keep a very close eye on this important point. Finally, there's opening up internationally here. We wanted to do a bit more to try to harmonise rules globally, and that's obviously going to be a challenge for the future as well. Thank you.
Thank you very much. And next speaker is Mr. Giegold.
Einführung einer risikobasierten
The introduction of a risk-based system such as Solvency II has taken place at a difficult time. a time of the financial crisis and all the concomitant problems, a period of low interest rates and other difficulties too. And this has meant that there have been a lot of demands on risk-based systems which have turned out not to be up to dealing with the present situation, and in turn has exerted a lot of pressure on national governments and their systems. They've been under pressure to change the systems, and the situation has been different from that prevailing in the banking sector, where there hasn't actually been a raft of anti-crisis measures. On the contrary, there's simply been a lot of pressure on the basic capital holdings of companies and insistence that they need to adjust their capital holdings to the tune of some 200 billion euros. These are huge sums, and I think it is very important that we are having this discussion. I regret only there are so few people here to hear it. The Parliament is always on the side of the consumer and is keen to see that the pressure that is being put on the member states should be to the benefit of the citizens, because we need to have a secure and consumer-friendly insurance system in place. And I think that it is very important that we ensure that there's no mathematical economic tinkering with important principles. And we are going to be very critically inclined to the appraisal of the implementation of this whole system. Thank you.
Speaker is Mr. Vujanic for 1 minute.
Thank you, President.
The years of negotiation have yielded these results. The solvency of insurance is a crucial issue. It's a prerequisite for confidence in this industry. It cannot operate otherwise. Trading in capital is risky by definition. High risk in handling one's own capital is borne by the owner of the capital, but in the case of insurance it's unacceptable. The beneficiaries of insurance, of pension insurance, have to have security. They must be able to ensure that the capital of the insurance business is enough to cover the risks. Otherwise, the profits will end up in private pockets.
Speaker is Mr. Sosa Wagner for 1 minute.
Since in 2010 we adopted a new supervision system, we've reformed more than 10 directives and incorporated mentions to new European supervisory bodies, and also to allow other delegating acts. With this new draft, further EU legislation will be affected. These reforms are necessary to ensure the solvency of financial institutions, but they give me pause for thought about the way we legislate. It seems to take an awfully long time to conclude legislation, and that's something that we often are critical of in legislation or resolutions on better legislation. We need to have expeditious procedures for doing this so that people hear what we do here in the Parliament. If we do that, we will get citizens' attention who feel perhaps a bit cut off by the wall of votes that we have in Parliament, because a lot of these votes are about things that could be delegated. Thank you.
Next speaker is Madam Petikainen for 2 minutes.
Financial stability and to protect our insurance beneficiaries much better. This is a major improvement and a step forward in this direction. Having this risk-based assessment in insurances, having a higher levels of basic capitals, and having a coherent pan-European surveillance system in place. Without these, we really can't ensure or guarantee safeguard the European insurance beneficiaries' position. What is still needed in the future is the long-term risks on those investments. Let us take up, for example, the investments on fossil fuels. And I would say that if our insurance systems or pension systems are too much invested on fossil fuels and environmentally risky businesses, this is a risk for the investments and this is a risk for the beneficiaries in the future too. So we need another kind of legislation to incorporate the environmental risks and resource efficiency risks in our legislation.
Thank you very much. And next speaker is Madame Galpelch.
Thank you, Mr. President. I would like to thank Mr. Burkhard Balz most warmly. Thank you. You've done a fine job of work. Now, basically what we're talking about is two authorities and their responsibilities. The report comes forward with changes to the way these bodies work. Now, we know full well that the financial crisis has focused our attention. It's made us realize that there are shortcomings in the system, so it's clear that new rules were necessary. It's very important to achieve a decent level of consistency and to ensure that we've got a single set of rules in the European Union, one applicable to all member states. Both of these authorities should promote transparency and stability. And as has already been pointed out, we have put a lot of work into this to ensure that these authorities can be created. I think it's well worth emphasizing that the requirements be reasonably in line with realities and that they have a proportional impact on the real economy. I think it's good that we're going to have this manual that's going to help guide us and guide those implementing these rules. Now, we've discussed the issue of derivatives repeatedly in committee, and I think that it's really important that OTC derivatives can be followed and monitored in a uniform way. There should be special capital requirements applicable to them. Integrity is, of course, hugely important, and this is a principle that we need to defend. Transparency, too, is hugely important. Thank you.
The eye, and first speaker is Mr. Cofferati for 1 minute.
Grazie Presidente, signor Commissario, anch'io.
Thank you very much indeed, President. I too am delighted that we have now come to the day of the plenary debate on this very important issue. And I agree with many points that were made by my colleagues. I'm delighted to see the recommendations for amendments made to EIOPA. I think the rapporteur and the shadows have done excellent work, and they have extended the scope of EIOPA and extended its prospects. I am concerned particularly, though, about the application of it, and I'm concerned about occupational pensions and the need for workers to have proper cover. A lot is being done in the area of prudential supervision, and this has happened in recent times within the third pillar. But I think it is very important that we ensure that insurance companies are properly regulated, that there is transparency, and that we thereby can protect the interests of the workers who have worked so hard in order to be able to achieve the pensions that they deserve. Thank you.
To Madame Maletic for 1 minute.
Thank you, Mr. President. I would like to thank the rapporteur for this report. From 2008, when the financial crisis started, it's become clear to all member states that it's important to coordinate and to control the management of financial institutions in order to restore confidence of citizens and reduce the risk of destabilizing the financial sector. Financial stability is a prerequisite for growth and jobs and for the opening of new businesses. The European supervisory system has to have rules and procedures to ensure a harmonized and coordinated approach to the internal market and a more efficient implementation of supervision in every member state based on the same approach. It's important that technical standards should not be involved when it comes to making strategic decisions, so they're not easy to set up.
Floor to Commissioner Borg for concluding remarks.
Yes, indeed, Mr. President, this is an important piece of legislation, and as Mr. Cofferati said, it affects everyone, particularly the working class and workers and lower income groups who depend on insurance much more than anyone else. So I appreciate this consensus which there is in this assembly and the agreement which was reached in the trialogue process, and I look forward to a swift adoption of this legislation. Of course, Mr. Sosa Wagner said, but it should have been a shorter process. I agree. Most commissioners, when proposing legislative proposals, would prefer to have a shorter process. But we must remember that this is not a federation, it is an organisation of sovereign states. These are laws which will apply for 500 million people, so one understands the laborious process needed to pass anything from two legislators, and in some cases also, in the case of Council, with a qualified majority. I take note of the question which both Mr. Cofferati and others have said on the implementation of this legislation. So D-Day is the 1st of January 2016, but of course the implementation will require implementing rules, particularly delegated acts, and of course we are bound to bear in mind also the proportionality principle, which was mentioned by some MEPs, and I can assure this Assembly that in the delegated acts not only will the ECON committee be involved in preparatory meetings also with Member States, but that we shall keep a close contact with this Assembly, because after all the delegated acts are so important in this legislation that we would need the widest consensus possible on the implementing rules themselves. I think that most of the comments were positive regarding this legislation. I know that the proof of the pudding is in the eating, as they say, so we are not yet over yet, but at least this will be a first important step which will be followed by the implementing legislation to give beef to the legislation itself. Thank you.
Thank you very much, Commissioner. And just now, at the end, I would like to give the floor to Rapporteur Mr. Balz.
Ja, herzlichen Dank, Herr Präsident. Omnibus II.
Thank you very much indeed, President. Omnibus II initially was intended to be a technical directive in the wake of the financial crisis, as colleagues have said. The question of its raison d'etre arose, and substantive changes have taken place as a result. I think they're necessary, they're extensive, but we need to bear in mind the background to all this. Regulation is important because usually companies are conservative in accumulating their reserves, and they take a wide view of that. So we have to look at the risk-based assessment, and we need to have stricter risk-based management and stricter reporting requirements. Many studies have been done, but despite all this and despite the intensive preparation that's taken place in the insurance industry, there's still a lot of improvement to be made. The costs will be great, the work will be great, and there will have to be an increase in the capital basis for these companies too. This is a long-term undertaking, and it's certainly not going to be easy. Long-term products, it's a long-term industry, are something which have existed for a long time and will continue to exist in our economy. obviously obligations undertaken vis-à-vis clients have to be complied with. Omnibus II, I think, is a very important step, the right step, in order to achieve this. And I'd like to say to the Commission that I think it's important that the delegated acts are completed. The European Parliament attaches great importance to this and is going to ensure that the requirements of the directives are complied with. This means proportionality. It has to be translated into the actual delegated acts, and when we have undertaken to do this and to ensure that we treat risk as we should, we must not allow small and medium-sized companies to be squeezed out by impossible measures which they can't comply with. So we have got to focus on stability, transparency. And with that in mind, Commissioner, I'd like to ask you, please, to ensure that you focus on your end goal, that you can count on the European Parliament with its support in working towards the delegated acts that are necessary for the implementation of Solvency II completely by 2016. I'd like to thank all the rapporteurs and very much indeed also the committee secretariat as well as the shadows, because we've worked on this for years, but in a spirit of trust and confidence and efficiency. Thank you.
Just now I would like to tell that the debate is closed and vote will be today at 12 o'clock. The next item on the agenda is a joint debate concerning money laundering, a report by Mrs. Kleva Kekuš and Mr. Kirkhope, information and accompanying transfers of funds, and a report by Mr. Karinš